Good morning, ladies and gentlemen, and thanks a lot for the warm welcome. It's of course great to be here at this event. It's of course great to be here in Paris. I think it's the best time of the year, and there's always a good excuse, of course, to come to Paris. In my short talk today, what I would like to focus on is focus on how innovation plays a role enabling everything in our world. A world which offers infinite opportunities to all of us, but a world which has finite resources. I want to actually focus on how we, in our industry, through choices, can make the industry going forward and shape the future. And then finally, please allow me some personal comments on innovation. We as leaders, we as people, we as industry, can actually make innovation happen. So, in many ways, when you look at it, the history of innovation is simply the history of doing more with less. If you just go back to the years of 1993 or 1994, when the first GSM mobile base stations came out in the world, and just look at the economic model which all of us who were there at that time used. And if we had to connect 6 billion people like we have today through all of the networks, we would not be able to do that. We can easily see that that economic model would have exhausted not only the resources available in our industry, but on top of that, we would have had a huge problem in terms of the human resources, the financial resource, and material energy available worldwide. So luckily, of course, we know history has been written already. We have not been stuck with the economics of 2 decades ago. So if you really look at the cost, my personal assumption is that the cost of deploying a base station, for example, would be maximum of 3 or 4% compared to what it was in 1991 when I saw the first GSM base stations. So how has this all been achieved? And innovation is the key. The technology innovation has allowed us to actually provide networks with a very different level of throughput, with a different energy efficiency, with a very different materials efficiency. All of this was undreamt 20 years ago. New business models, and that's also innovation. So new business models have allowed us sharing the investments between companies within our industry and across industries. The new ways of working, and again, that's also innovation. New processes have increased the productivity of our workers. So we have been able to eliminate tasks, we've been able to accelerate activities, we've replaced them by software, we are automating a lot of the activities, and through this we're actually doing a lot more than was thought of previously. So fundamentally, innovation is the key to enabling technology to be the driver of the growth in our world. And as I said, a world with infinite opportunities but finite resources. So when I look at this, I mean truly all of the resources. So not just the world's natural resources. There's finite capital, there are finite labor resources. And most of the innovations which we're talking about, which allow us driving this industry forward, is coming from everything we do. It's coming from the world of telecommunication and information. So looking at telecommunication as an enabler, I found myself a couple of weeks ago with the Commissioner of the European Union discussing, together with some other industry leaders, we were discussing ways to bring Europe ahead in ICT without leaving anybody behind. So our debate touched on ways to share the costs of new telecommunication infrastructure fairly and how to create plain level fields. And that's not only within Europe, but also with countries outside Europe, for example, China, in terms of issues such as access to research and development. ICT is seen as vital in our society. As I said, it's a key enabler for innovation, and it's a key enabler for many other industries. Just look at medicine, you look at transport, you look at production industry, you look at finance. It's now widely accepted that actually connectivity is the 4th primary factor alongside land, labor, and the capital goods. So just look at GDP as an example. Multiple studies have found links between the telecommunication penetration, broadband availability, and economic growth. So when we are standing in a mature market like Europe, right, we sometimes are arrogant, complacent, and we say, well, we are leading anyway, we've got everything behind us. But if you look at the data coming from the analysts addressing Europe and US, it's actually staggering. So it's not just about emerging markets like Brazil or South Africa. So a study which we at Nokia Siemens Networks commissioned shows that the US could increase their GDP by $100 billion with an increase of 10 additional broadband lines per 100 people. So by increasing penetration by 10%, the US would be able to increase GDP by 100 billion. I don't know whether you followed this, but last week there was a research published by Oxford Economics together with AT&T, and they showed that Europe could increase GDP by 2020 by 5%, merely by matching the investment level which the US have already today. So catching up to what the US are doing in broadband investments, we would be able to increase GDP by 5% in Europe. And that's, of course, why the commissioner in Brussels says we do need to do something, and as an industry, we need to do something together. Simply put, no broadband, no development. So this is the opportunity, and it's a challenge, of course, but it's the opportunity for all of us in this room and how we do this. So within NSN, what we do every year, we look at the different societies. We publish what we call the connectivity scorecard. So this is a way of ranking countries against each other, so a benchmark, using a number of connectivity criteria, which then comprise consumer, business, and public sector infrastructure. So we're looking at the investments, usage, and the skills. So it's a unique study in a way that it doesn't only look at the physical connectivity of the infrastructure, but it also looks at how effectively infrastructure is then being applied within the different countries. So if you look at the 2011 study, you'll see that there are 6 European countries in the top 10. But remember, this year's success will not carry you further unless you actually drive for more in the future. Same thing here. What is good this year will not be good next year. So if you look at the history of the connectivity scorecard, you see how countries move. I was recently in Spain, and you look where Spain is today with a huge potential to catch up. And if you just translate into the Spanish economic growth, you can really see the potential which can be unleashed if the connectivity investments are going in there in the right way. The latest Eurostat figures show that the fixed broadband penetration in Europe is around 26–27%. But just compare that with the goals which we have for Digital Europe. So Europe needs download rates of 30 megabit per second for every one of its citizens. And at least half of the citizens in Europe, 50%, subscribing to the internet connections should have above 100 megabit per second by 2020. And who knows more or better than us here in the room that we're very far away from that. The world continues to go mobile, no doubt about this. So Nokia Siemens Networks, we actually estimate that the total mobile broadband traffic may increase up to 1,000-fold by 2020. So 1,000-fold. So this basically assumes about 100 times higher traffic per user. We estimate we'll go to the 1 gigabit per user per day with smartphones, tablets. I mean, just walk around the exhibition, you'll see the penetration. And then, of course, the connected home combined with the hunger for the video application will drive this a lot. So if innovation is the key to doing more with less, so what contribution can we, as a telecommunication infrastructure, as a telecommunication application, device, connectivity industry can actually do for the industry, and how can we actually raise efficiency, and what do we need to do to enable this? Let's look at some of the ways. The first one, of course, is providing applications and services which are enabled by faster speeds. So today, the biggest growth driver undoubtedly is video. Actually, 2011 is the year of the video. Today, this year, video traffic will overtake anything else in the networks. And if you look at the smartphones, if you look at the mass adoption of tablets, clearly it has to be video. It has to be in color. It has to be high definition. So the rapid growth of the videos shows how the technology landscape can change. If you just look 2 years ago, who would have predicted that on a normal North American evening, 20% of all of the internet traffic is coming from a company called Netflix. So 1/5 of all the internet traffic on a normal American evening is coming from Netflix. And the demands, of course, are startling. So if you look at how many people are using the video with the smartphones, the tablets, what's the impact of the network, what's the impact on the whole ecosystem, and the main question we have to answer is, how do we actually enable this? Because the economic models of today will not work in 2 years' time anymore. We see a huge demand coming up. We don't see the preparedness to pay in the same way. So we have to clearly change the economic model in a very similar way as we changed the economic model between 1993 and today. Actually, we are not truly in the mobile phone business anymore, because if you look at some of the studies again, the usage of the phone, of the smartphone, the function of using the phone is only the 4th most popular application those days. So a lot of other changes coming through this. So if I just look at some of the underlying technologies, clearly LTE with 40 megabit per second, they open today a huge range of opportunities. From HTML mail to the automatic real-time translation, we'll see data push services, and of course, mobile video. If I look at the connected home, if you look at the next generation optical network, huge interest in this. Clearly, we see opportunities in terms of the symmetrical service coming up, the kind of demands that will come with the cloud-based services, that will come with the multi-user gaming. You look at the multi-screen experience at home. You look at the extension of cable networks towards mobility. So there are many business opportunities which are built around video and which are enabled by the new technologies. Equally important, the enterprise environment. If I just look at our company, 72,000 employees, and I look at our telepresence rooms, which we have across the world, they are booked around the clock, because communication and high-definition communication through video is so important. Let me switch a bit to technology. We are actually building fantastic networks. You go, when I have my customer meetings, they like the technology, they like the innovation, they like the performance of the networks. But truly, we are building wrong networks. Today, what we're doing is a big mistake. The networks, they work for what they're supposed to do. They deliver to the consumers the services they want to have. But they are not today optimized in a way that the networks actually follow the services and demand. The way we build the networks today is wrong, because our thinking today is still static. And what we need to do is we have to start our thinking, and it's, as always, between the ears. We have to start changing our thinking and become much more dynamic. We have not yet built networks that match the flow and the energy of the communication and connectivity in our society. I mean, you all are in the industry, so you know what I'm, of course, talking about. So if you look at a city like Paris, and you see how from the suburbs, the residential areas, the traffic demands flows in the morning through the cities, with all the peaks and off-peak hours as we know them, and it flows back towards the end of the evening to the homes again. Well, you might have some hotspots if Saint-Germain plays in the Parc des Princes in a Champions League match. But otherwise, this is what we see every single day. And the way we describe it is, it's like a wave. The consequence is most of the network is either heavily underused or heavily overused. And that's the economic model which we are using today when we build networks. We install a high capacity because that's needed. I mean, there's no compromise in performance possible. You install a high capacity, and as I said, and then we underuse it or we overuse it. So in our view in the future, the connectivity must be actually designed to take those traffic fluctuations into account. Networks need to intelligently distribute the resources, both on the core side as well as the radio side, in such a way that there's a best balance between the demand and the supply of the connectivity. We call this the liquid network, because liquidity is truly what we need. Our studies have shown that with this approach, we will be able as an industry, because it's not just about one company, this is about the industry moving this way, that we will be able to unleash about 80% of capacity in the radio networks and about half of the core network capacity. And that then allows economic models which will be the fundament for the growth in terms of the services which are driven by the consumers. So this is a very flexible approach. It's based on distributed, multi-purpose hardware rather than on monolithic, big boxes and centralized control. As I said, this is required. Otherwise, we won't be able to serve the increased demands which is coming from the society. We have to build an economic model that will actually drive this forward. So allow me to take now, after this technology side, the whole equation from yet another third dimension, and that's the customer experience. Because basically, we have to ask the question, what is it that the customers, the consumers, the enterprises truly want from us as an industry, from us as service providers, from us as technology providers into this industry? And it's very easy. We know all of this. So they want to have unlimited capacity. They want to have the highest speed possible. They want to have competitive prices. They want to have great deals. They want to have flashy, great new devices. They want to have new applications, and all at the same time. If you talk to marketing executives, they dream of the market of one. They dream of being able to target the individual with their marketing expenses. When you talk to consumers, actually that's exactly what they want. That's what we want, because we want to be treated as individuals. We want to be addressed by an offer which matches exactly what we want. And of course, what attracts one person does not attract another person. So each of us we have our own preferences. We have our own usage patterns. We have different financial possibilities, consumption capabilities. We're in different places, meeting other people. So what makes this, of course, much more complicated is that there's multiple sets of data which we have to handle. Where the people live, how old they are, what sex they have. And we have worked with this over the past 20, 30 years in this industry. But actually, that is not what this is about. So just statistical data will not predict the preferences and the services of the future. So what is much more reliable, of course, is what consumers have bought in the past and what their friends and their society around them actually consumes. So we work a lot with what we call customer insight and experience. Because if you want to build a liquid network, the only way you can do that is by starting from the end consumer and understanding what are the services which they actually want to have going forward. And of course, you have to look at things like the network quality. You have to look at the portfolio, the pricing, and complaint and problem handling. That's the only way you will actually be able to differentiate between the fireman who's at an emergency and needs connectivity and the youngster, the teenager who's doing a video download from YouTube. Or any of us in Paris who are at the moment synchronizing our email, and we're paying a lot for the roaming charges. So it's important to understand all of this. Consumers want to have their own suite of services. We want to be connected to our own individual social networks, be it to friends, be it at work, or be it in the family. Our spending behavior, actually our spending capabilities, are very different. And equally, what we need to be able to do is have a very differentiated service offering, service performance, and service pricing, following that flow. Unless we understand that, we'll not be able to actually design the capacity underneath in order to serve this demand, and then we will not be able to have the economic model which allows to drive this industry going forward. If I look at using customer data, of course, I have to talk a little bit about the privacy paradox, because it's a double-edged sword. On one hand, each one of us, we protect our private data with fierce, because this is ours. We don't want to give it to anybody else. At the same time, we are extremely impressed when we get an offer by a company that actually matches exactly our needs. An offer which is personalized towards me. So how to actually solve that paradox of my data is mine, but I want to protect it, but I'm happy if somebody else uses it in order to provide me with the services I want. When we talk about privacy, we talk about a bank account and a credit card. But fundamentally, that's not what it's about. It's about our choices. That's the privacy that truly matters. What we consume, where we are, who we meet, who we talk to, that's truly what defines us as a consumer. So what's important is to have this differentiated consumer experience as an additional puzzle in this piece on how we build the telecommunication network, the global telecommunication network, which is needed in order to drive society going forward. Coming to the last part of my presentation, I'd like to come back to the whole topic of innovation, because this will not happen without innovation. And today, if you just look at what's happening in our industry, just go back 3 years ago. Who would have thought that Google is one of the leading handset manufacturers? Who would have thought what's happening with Apple? Who would have thought all of these great innovations have come in our industry from outside of the industry and not from within? So there are a lot of things which are happening, and as I said, now there's an opportunity for us as an industry to bring the innovation into transport, into medicine, into the health services, into the banking system, into the production industry, retail, entertainment, very clearly. And this is clearly where we, as an industry, all of us in this room, have a responsibility to take this forward. I would like to take the last couple of minutes to just have a final sort of sharing of an important thought around innovation. Because it's so easy to talk about innovation, but it's very difficult to do. And we as leaders have a responsibility. Each one of you sitting in this room, and each one of us, we lead large organizations. And how do we actually get to innovation? So if you really look at the nature of innovation, innovation is, I'm doing something I've never done before. It's new. I mean, that's innovation, right? It's actually perhaps something which nobody else in this world has ever done before. Now, what are the odds if this is something nobody's ever done before that I'm going to fail? In my count, it's about 7 out of 10 times if I do something we've never done before, I fail, right? So innovation goes very closely with failure. And in a world where we today, I mean, we just read the newspapers, right? In a world where we are not allowed to fail as an industry, as companies who are publicly traded, where we've got the analysts and the journalists watching over our backs every single day, where shareholders are putting a lot of pressure on this, there's a huge challenge for each one of us to actually drive innovation in our ecosystem. Because we need to be prepared to fail. If we're not prepared to fail, we will not drive innovation. We need to have the dialogue across the players in the industry which accepts failure as a normal way towards innovation. And with this, I'd like to close. There are multiple opportunities in the society going forward. We in the ICT industry have a huge responsibility in order to make this happen. Economic models will not work unless we drive innovation through our industry. We will not be able to provide the financial basis to actually translate consumer demand into infrastructure and then ultimately, of course, into financial results. With this, thanks a lot for listening.